waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high, watching the candles, reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge, finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets call, balance based drawdown, standing strong through it all. Risk defined, profit inside. Seacrest Markets guiding every step into the light. Seacrest Markets leading the way. Making a move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Let's talk execution, let's talk speed. Damn, that crystal clarity is what we need. Some is action, just the price as I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Secrets is a vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call, balance based drawdown, standing strong through it all. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 or match trader speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. We're the new era, the elite of the screen. Navigating depths where the giants are seen. Seacrest the name, the gold standard inside. Turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision. We are the flow.
Welcome everyone to Wednesday, the 7th of January, 2025. Today, we are going to be joined by one of our affiliates, Wiz Anubis. So, Wiz, welcome to the show. Hope you're well.
Yes, well, thank you very much for the invite. I am honored to be here. Good morning. Can you hear me?
Wiz, I think you're having a bit of mic problems at the moment.
Okay, let me check that real quick. How is it now? Can you hear me
Just
now?
double check your settings. Yeah, it should be there. Sorry, everybody, for the technical glitches. Good morning, everybody. Anyway, so Wiz will be sure to join us throughout the show. Hopefully, once we can figure out the mic. Oh, good. They can hear you, Wiz. That's brilliant.
Okay.
Market-wise. Did anyone get in any, obviously before we do like a full breakdown, did anyone get in any longs yesterday? Markets were definitely pretty decent. I think it was quite a landmark day, really, if we look at the way the markets were. Did anyone get long or short? Did anyone take any decent trades? DAX flying, yeah. Stayed out of the charts yesterday. How comes, Saucy? Saucy. Great name. Hi. Well, listen, first of all, welcome to Seacrest Markets. And congratulations on taking the first step in your journey, one of the hardest games in the world. It's definitely something that takes time. I had a great interview with one of our successful funded traders yesterday. So hopefully the show recording comes out in the next couple of weeks. And he's a trader that's been trading for 4 or 5 years. He's actually been a funded trader with Seacrest, which was formerly known as My Funded FX, since 2024 and has got multiple payouts during that time. And there's a couple of key takeaways from that live, which I won't spoil it. I'd love you to all go over and watch it. And if you, of course, need to be aware of it, subscribe to the channel, turn on notifications, and like all of the videos that we've done so far, or at least the ones that I've done so far. I was lucky enough to buy US 30 on Monday before the US session. Okay. I nearly called you Enron, but your name is Eron. Enron, of course, is the famous company that many people tried to get long many years ago, did very successfully. And then, of course, the business went absolutely Pete Tong, and it was a huge, huge issue. So I'm guessing you got long in and around somewhere in here, Enron. Eron. Sorry, mate. I'm guessing you got long somewhere in and around here. I did have a long in ES. Sorry, I got long in ES. I know you said US 30. I got long ES on Monday, and I got long ES yesterday. What am I expecting today? Yeah, I know US 30 was a different instrument, but it would have been around this kind of time, pre-era. ES short 1035. 1035. Whose time? Today or the other day? I expect some profit taking, so I think that could be expected. Like if we look at the way the market's traded, right? So if we just look at the way Monday traded, Monday, of course, we had that huge bullish expansion with a bearish correction. We then traded inside a very corrective range. Of course, after we rejected the higher, which failed to take and trade higher, then, of course, this low got taken. So we had a very corrective overnight session trading into Asia, then heading out into London. We pretty much traded up into bullish territory. But what we did do is, obviously, if supply wanted to keep and take control or stay in control. Sorry, I'm just trying to. I've got a new mic. I've got a mic up here, but I've also got a mic here now, just to try and improve overall quality. We had that rejection of supply, but if obviously we wanted to get that continuation to the downside, we would have obviously wanted to see that supply hold, this low go, and then of course we would have looked for continuations to get short. But it pretty much did exactly what we wanted. It had that bullish corrective move. We came in, rejected supply, came back down, and we traded back into the range of demand, which is essentially the false move. So the false move was the shorts. It's pretty much taking that move to trade higher. And then we've taken out all of that kind of move to the left from that breakout. And of course, we've just traded higher, taken out that previous area of resistance or supply, however you want to deem it. Come back in, respected the flip. So we've respected that previous area of supply that turned into the demand respect and the extreme of the leg, which caused the failure of all of the areas of resistance to the left. And we've come back in and respected that area of demand, and we traded higher. Now, a lot of people would try to originally get in the move from somewhere around here on the 2 minute, the 1 minute time frame, maybe even the 5 minute time frame. Maybe they would have even just taken a long from this area if they believed that the overall strength was bullish and the markets were fractal on the lower time frame. However, when it comes to overall markets, the things I look at the most on a day trading perspective are, I look at volume with session profile, which is here. I'll take into consideration ATR. So I'll be looking at the average range of the market. Then I'll be looking at the extensions of the ATR. And then I'll be also taking into consideration VWAP, anchored VWAP, stuff like that. And then when it comes into the US session, more so, I focus on Bookmap, which of course is the future side of things, but it gives you the underlying readings of the markets, tries to help you out with where we could potentially see decent bids and offers in the markets. And of course, we can track market conditions. So it's always helpful when it comes into the US session. And then we corrected. So this is the same. This is coming back to that comment. I expect a correction. So markets obviously have corrected overnight. We've taken profit from the moves up, and we're now starting to trade down. I see that Wiz has rejoined. Hi, Wiz. How are you?
Hi, I'm doing well. I hope you can hear me now.
Nice. Wiz, if you can, just share your story with the community, the viewers, and just let them know your journey with Seacrest Markets, please.
Okay. Thank you very much. I discovered Seacrest when it was formerly known as My Funded FX, and that was towards the end of 2022, particularly December 2022. And I actually won a giveaway on X. So I joined their Discord and I read their rules, and everything was very, very favorable to me. So I started trading with them, and it's been very, very good because the staff, the support, the trading conditions, everything about Seacrest is just it's just brilliant. And I like the fact that no matter the kind of problem you have with Seacrest, once you reach out to support, they are very, very quick to rectify your problems. So trading with Seacrest has been fun. There has been downsides due to my own lack of discipline, but all in all, it has been great so far. And I would like everyone to join Seacrest as well, because the environment alone is amazing.
I can also hear Wiz now, so rock on. We love it. It looks like there was an issue on my end. One of the default settings of my audio decided to change, but no, I can hear you, Wiz. So thank you very much for the introduction, and again, thank you for the compliments of asking and recommending everyone to join us. So, in terms of trading, Wiz, what instruments do you trade?
This year, I've been trying to diversify, trading multiple pairs. For the most part, since 2022 to the middle of 2024, I was trading only Euro USD. But
Okay.
now I have about six pairs on my watch list. I have AUD USD, I have Germany 40, Euro JPY, GBP CAD, and GBP USD.
Nice. So it's fair to say that you like FX pairs.
Yes. I also touch cryptocurrencies during the weekend.
Okay. Wiz, just tell everyone how you trade. Like, are you a day trader, intraday, scalper, swing?
I'm a day trader, but my strategy can turn my trades into swings.
Yeah, nice. I remember saying, and this isn't me trying to take the mickey, Wiz. When I was early on in the markets, I remember used to be saying, I'm going to hit this as a day trade. But then because it goes down so far, I turn it into a swing trade. I'm like, oh, no. This isn't a day trade anymore. This is a swing trade. and it's purely because I'd see price reverse against my entry. And it would be obviously underwater. And I'd be like, oh, no, I don't want this to hit my stop loss. And this was, we're talking like 2-3 months into my journey about 20 years ago. I'd be like, oh, no, this is a swing trade. Don't worry, this is a swing trade. I remember the days. So
Yeah, that would have been nice.
So everyone, let's quickly cover. Before we do a full breakdown of markets, have a look at some ideas, see where we're coming from. Let's quickly recap what happened yesterday in the markets. Now, like I said, I do genuinely believe that it was pretty much a landmark day yesterday. From a perspective of discussions on Monday when I was talking about the Santa Claus rally, which we never got. And I think we're seeing it now. It may have arrived late, but it clearly has arrived with force. Like we've seen the core narrative is massively shifted, right? We've seen Venezuelan stability, which has equaled lower oil, lower inflation, expectations of more rate cuts out from the US Fed and the UK Bank of England and the ECB. At the moment, what we're looking for is non-farm payrolls and ISM services, which will be coming out later this week. They will realistically determine whether this is actually going to be an everything rally and whether it actually has the fundamental legs to continue through January. Obviously, from a rotation perspective, which I touched upon on Monday's live. So if you haven't seen Monday's live, feel free to go back to it. And of course, I did touch upon it during yesterday's live as well. What we're seeing is kind of cryptocurrencies wrapped in equities. So BlackRock mentioned something called the IBIT, which it's called BlackRock's IBIT or IBIT. And the goal is basically for institutional money as a primary driver of the current crypto leg with the underlying assets. So I think we need to see how ISM manufacturing and non-farm payrolls play out later this week. You know, we're trading into Wednesday. Traditionally, what we see is Wednesday, Thursday's price action is fairly corrective because we're waiting for higher impact red folder news, macro news to come out to give us some form of clarity and direction. The first few days this year, on terms of full trading days, Monday and Tuesday of this week, they've been exceptional. You know, very, very easy markets to trade. You know, obviously it's bullish momentum, it's bullish tones. You're just waiting for the market to show its hand and you can get in. Now, in the last few days, you've had multiple 1-to-1R trades. You've had a couple of 1-to-2 plus trades. And for a trader that is intraday trading, maybe scalping, but kind of more like scalp day, because of course you've got so many firms out there that are doing the less than 1 minute rule. You know, oh, you've held it for less than 1 minute, you're a scalper. Less than 2 minutes, you're a scalper. No stop loss, you're a scalper. And because obviously stop losses are imperative as well, because from a risk management perspective, without a stop loss, it's very difficult unless you have, you know, your VAR calculations, your MAE calculations to actually understand and identify what the trader has on the line. So I know that we've got very advanced reporting methods and risk methods at Seacrest, and we have fully automated rules and fully automated tools and reports that provide us with millisecond updates on every execution across every trader, across every instrument, across every asset class. So we don't miss a thing. But I know that not all firms have that. And these are kind of rules and reports that we've built out with the quants on the team, with the risk guys. So, yeah. But let's talk, now that I've given a summary and I've given an idea and an overview of importance of risk, sometimes I go off on a tangent just because I can. I think risk on sentiment is definitely the tone from Tuesday. Blue chip sector, obviously in the stock market, massively rallied. Of course, you saw the S&P rally. The Dow traded above 49,000 for the first time in its history, which is another target that we set on Monday. That was actually a move over 600 points. Now that's huge. 600 points might not, 600 points is massive, but in terms of percentage, it wasn't that much. I think it was like 1.23%. So one spot, 2-3%. So literally 1, 2, 3. Again, the S&P, which we've got on the screen, reached a fresh record high. It closed at what, 6,000? Let me just double check. 6,944. Yeah, 6,944.82, which percentage gain wise wasn't as much. It was like spot 64%. And the Nasdaq actually, the Nasdaq was a good performer because it actually broke its 5-day losing streak, and that rallied up spot 69%. So definitely positive. Tech, yeah, it was initially sluggish. Later, obviously, we saw that revitalization with a massive rally in AI data storage stocks. So we saw stocks like, so just to give you an idea, I day trade and I position trade. So I've got a large investment portfolio that I invest into individual single stocks. My main focus is in the US. So if you ever wonder why I talk about certain things and why I like to cover this sort of information, it's purely because I believe it will benefit you. So the two biggest stocks that rallied yesterday from an AI data perspective were SanDisk. SanDisk rallied 28% and Western Digital rallied 17%. Now, as a financial professional, I would always recommend having a day trading portfolio if that's what you're into, as well as building something long-term for wealth management, for your retirement, for your pensions, whether that's a growth portfolio, whether that's an income portfolio, or whether it's a hybrid portfolio, combating both growth and income. Now, of course, it will depend on your age, and this isn't financial advice. This is just kind of general chit chat, general guidance, and recommendations of how I do things and the way I see things. Different ages and brackets will have different risk tolerances, will have different responsibilities. The older you get, the less risk from a pension perspective you may want to take. The younger you are, you may want to be all growth because you've got a long enough time for the market to continue to try to deliver the average 10%. And if you want to play it a little bit cooler, a little bit easier, there are ways to look at it. Maybe you could put 40% into just an ETF, an index fund, and let that do its average 9 to 10% over the 30 years every year. That's the average ROI, 9% to 10%. And then if you want to outperform the index and outperform, for example, the risk-free rates, the benchmarks, then you start to actually utilize that additional balance, which was 60%, into single stock selection. So that's where you need to have a correct methodology and edge. And they're not complex. You don't need complexity in very simple quantum investing strategies that look at either momentum or value. And there's a lot of ways to do it. But so that rally from Nasdaq was primarily driven from AI data and, of course, tech stocks. But of course, the bigger two that kind of really stood out to me were Western Digital and SanDisk. So I won't go too much on a tangent in terms of actual investing. I know I actually spent, so Starboy, I spent an hour yesterday. So I switched browsers. I changed settings and functions on my camera. I changed settings and functions on browsers. I double checked that all of the drivers were up to date. I double checked that my Windows software was on the operating system that it needed to be. And just to clarify, my camera, just for everyone watching, is called the Logitech Brio 4K. It's actually custom designed, so to speak, for streaming. It's perfectly designed for streaming. And the glitch continues to happen. And I've adjusted the resolution. I've adjusted the refresh rate, and it's got a lot better. It's still not good. Like, you'll just see me bring it up on my screen, but I've got streaming mode on. I've got auto exposure on. I have to have it with a streaming mode. But yeah, it's really annoying. So I apologize. I really apologize, because what I'm going to probably do for tomorrow's stream is I'll probably try and connect my Sony Alpha up, and I'll have that running, because Monday and Tuesday's stream, the glitch was a lot worse. And I'm doing that because I can see myself in the top left-hand corner. So I apologize. I really do apologize. it's not the most professional. Unfortunately, it keeps glitching, but I have all of the right software. I've made all of the right tweaks, even in browser. So changing certain browser settings to ensure that it can take into consideration. But what one of the recommendations is that the Brio 4K is too powerful for streaming. And I'm like, well, what's the point of having it? So yeah, let me just double check something. Let me just see if I can go down to manual, and I'll turn off auto exposure so it will change the color settings immediately, and I'll increase my ISO, and let's see if it improves it a little bit, because obviously it turns off auto exposure and it will turn off HDR. So I'll do that. Hopefully it helps, just so that you have a better viewing, because I know you like staring at this. I'm only messing. So that was the US markets. DAX, someone mentioned DAX early on. I can definitely analyze DAX, not a problem at all. And I'll just give a quick overview of DAX while I do it, because of course DAX definitely rallied nicely. Let me just double check something quickly. No, I haven't got it here. So we'll just run a new move. Let's do Zetra. Okay, cool. So let's move out to the daily. Best way to start. We could go out to the weekly if we really want to, but most of you probably don't hold swing trades or any swing positions in DAX for this long. But you can see it. Overall tonality is absolutely bullish. You know, there's the main indices that I invest into in terms of single stocks as well. I look at US mostly, then I have European exposure through the DAX, through Germany and Poland, and then obviously I'll have some exposure into the UK as well. I'm not, even though I am British, and of course I should massively be supporting the UK. It's very difficult when you're seeing what's going on internally to be bullish. But don't get me wrong, you could have just invested into the FTSE 100 like you do with the S&P, like you do with the Dow, etc. However, the FTSE's, 70% of it's made up from international exposure from the dollar, and then 10% of that on top of that to make 80% is from euro, so exposure in euro. So you've got 20% that is actually nationalized into the UK. So it's not a true barometer of the strength in the UK. You really want to be looking at, for example, FTSE AIM or FTSE All Share to kind of get a better picture. But like the FTSE AIM is down like 34% over the last 5 years. So that just gives you an idea of where the UK market is. But overall, DAX, at this moment in time, it's continuously making higher highs, higher lows, still bullish at the moment. Obviously, we had that bearish containment. It did try to fake out and show us a potential softening to get short. Of course, as you can see, we took out to the upside and we're continuing trading higher. From a weekly perspective, there is that idea now that we are going to be looking on both on the weekly and on the daily that we're expecting a pullback. So we've had rallies across all of the indexes. So it wouldn't be adverse to start thinking that could be some softening in growth. It doesn't necessarily mean we get short. It just means that we may want to stay out of the market for a little while until either the market rebalances, it maybe comes down into the discount of the leg, we start to get better pricing, or we start to see overall better opportunities. Like there are reasons to get long at highs. Like if you're going to be looking for a long here, then there are reasons to get long from, for example, the 52-week highs or something along those lines if you wish to. But once we're already long, it doesn't necessarily mean that you want to keep getting long from certain areas. So just be careful of getting long up here. I'd expect a pullback. Like we've got that huge gap, right? There's a gap in here. So traditionally we will see gaps get filled. So I'd obviously want to see how our market opens from yesterday. But overall, we're still long. Like I can't argue with anything. I would realistically think, we'll see this gap get filled, or at least 50% of that gap will get filled. So I'm expecting I'd expect a pullback. Again, same thing. Look, higher highs, higher lows, higher highs, higher lows. So overall, we've got key structure points that we could take into consideration. Like, these aren't the best. This one obviously was the previous area of demand. It got respected. Support got respected. We traded higher. In theory, this is no longer prevalent. It may hold, but obviously the more times levels get tested, the weaker they become, not necessarily the stronger. We've got this whole range here that we could come back to. This is really soft. It's a rounded bottom. So this is realistically the first point of structure that I'd look for. It could hold, but momentum at the end of the day is bullish. So we want to look for long. So we're looking for rebalancing of pricing, correction of pricing on higher time frames. It doesn't necessarily mean if we were to go down into the 15-minute that we couldn't look for shorts back into it. But I'd have to see some form of structure develop. Like, there's nothing here. So for me, I'd be looking for a pullback into demand to rebalance to get long. If, you know, if that fails, then there is the opportunity to actually get short. But for now, nothing done. I'd still be long DAX. Maybe start profit taking if I am long, because I'd be wanting to see price fill that gap. But for me, there's nothing else to be done on DAX at the moment. Like, even if I go down into lower time frames, we can start forcing things, and that's the problem. The word there was forcing. You know, we can start forcing shorts here because the expectation is we're overextended in the move. We've got the gap that could potentially be filled, and we want to see a better pricing. So we want to see rebalancing, price to move down into the discount of the leg, maybe to come back towards, 24.9s. Because we're trading at 2,500, so a big round number. It's a big move. That's a big move, and I don't think we've seen that level ever. So that's, again, another all-time high set in the market. So massive euphoria in a stock market. So this is great. This is an incredible time to be a trader, specifically in these markets. We've had the easiest markets we could ever have over the last 4 or 5 years, specifically stock market related. FX, not so much. We know why. It's mean reverting. There are still opportunities. We've seen the dollar, obviously the de-dollarization trade. We've seen softening of the dollar, but we cannot argue with the overall moves. The point now being is, let's not get caught up in euphoria. Let's focus on realistically what's going to happen next, which we've taken out all-time highs at 2,500s. We've set another record high. We've created a huge gap up overnight, or from the open. So the expectations are either we continue strength to trade rallying, but there is realistically the opportunity to start looking at this and go, right, let's start profit taking. Let's soften our trades. Let's wait for the price to get back to its discount of the leg, and then we can start to look for better risk reward trades. So yeah, nothing done for me on that particular scenario. FX pairs. Saucy, what FX pairs would you like me to cover? Because I'm about to quickly go over metals, and then I can discuss FX as well. No, I'm not sure. Listen, I will adapt to the market conditions. There is no way I'd look for a short in this market. For me, if anything, it's profit taking and waiting. There is no structure in that leg to get short. I'm not bothered about shorts. I actually struggle to take shorts. For me, it's, if you're in long, start considering profit taking, or run a trailer so that you don't actually get out too soon. You let the market show its hands and take you out. Or if you're not in a trade, stay flat. They're the 2 points for me. Either profit take and run a trailer, or stay flat. There's no way you should be shorting that market unless you want to be trading on low probability. It's extremely ignorant of risk. Like that, the only point that says to me get short is we've taken out an all-time high. We've overextended, but there's no reason to try and get short. So there's no way in hell that I'd get short. Listen, it could play out, but for me, I don't care. EU CAD. Okay. Give me 1 second. Cool. Any particular, on EuroCAD, any particular feed? Or you're not bothered? I'll cover gold as well. Yeah, cool. No worries. I'll just run it on IC just because I know so many people have a personal account there. It's easier. So again, from a daily perspective on EuroCAD, now you've got to remember that overall, when we can have Wiz on if you want, Saucy. Wiz, do you trade EuroCAD?
No, sadly, I don't. But
fair enough. All right. Well, listen, Wiz, jump in when you want. Jump in when you want on the markets. It's clear that Saucy wants to get involved. I'd love you to get involved. So feel free to run it up with me. That's not an issue. In terms of EuroCAD, again, jump in, Wiz, when you want to. Obviously, we've got, that previous high that was broken. We've then obviously traded lower. So we've got demand has been broken and demand's failed. Supply's then taken control. We've then, of course, got the higher lows obviously being primed for a rejection. So obviously we've got that bearish flag continuation, if you want to deem it that way. Lower highs being printed, demand gets failed. So we're short, right? Current price action right here suggests that we want to be short. Obviously after this rejection, to me, this looks like we're going to start ranging. So for me, what I'll be looking at is the following. How do we respect this high here? Because this is that last point of structural high that tried to break the low, because this is now deemed weak. Do we trade above it? If we trade above it, where's demand? Does demand get respected? And then can we look for longs from somewhere inside here? That would be my first point. Now, alternatively, if demand continues to be respected as well as supply in terms of the range, because as you can see, we've got the failure to break this low. And whilst this high is now weak, this area of resistance supply could still be respected. So we could just continue drifting in this range. Now, there's two ways to look at this range. We either continue to range, we have a fake breakout to the downside, we then trade higher. Or alternatively, we break, we then respect that previous area of support, which then becomes resistance, and then we look for shorts from that. So that's pretty much what I'd be looking for at the moment on the daily. Now, of course, if we drift down into the 4 hour, Wiz, do you think of anything different on that one? Do you think that's pretty obvious what you're looking at there, or would you have a different view?
No. I'm on the same view with you.
Nice. You don't have to be, just so you know. Oh, you meant euro, dollar, and US CAD. Sorry, if you said, I apologize. That's my bad. I read it as EU CAD. You meant euro, dollar, and UCAD. Well, euro CAD, I've covered. So there's a little bit of an extra bonus for you. So let's cover fiber, which is euro, dollar. And I know that Wiz covers this. So Wiz, if you want to share your screen, if you don't mind sharing your screen, feel free to share your screen with euro, dollar. And you can cover it, and I can jump in, and I can add context wherever you want me to.
Okay, let me do that now.
Right, I'll stop sharing. Do you look at correlation between different indices? The main correlation for me, Alec, is DXY. If I'm looking at that kind of correlation, it'll be DXY. Exactly.
I don't do correlations. I just trade what I see, what the market shows me,
Yeah.
irrespective of the charts. So
Your screen's
I
just
actually
loading.
haven't traded. Oh, can you see my screen now?
Yep, can see it now.
Okay. I haven't really traded Euro USD in a while, but what I have so far, since it's the beginning of the month, I mark out my monthly levels, and I currently have a monthly imbalance that I am waiting for to be filled. And
Okay.
using the line charts, the most recent monthly breakup structure is bullish, which means I'll be looking for longs. And on the weekly, we also closed bullish. We also closed bullish as seen on the line charts again. So I am
Yeah.
just waiting for a monthly mitigation with a lower time frame confirmation before I look for longs. So everything that is happening right now is just me sitting on my hands. That's what I have for Euro USD. Until the higher time frame mitigation occurs with a lower time frame confirmation, I am not doing anything on Euro USD.
Okay. I think, to add some context to that, the 4 hour is obviously on the momentum of order flow, the 4 hours switched bearish. So you're potentially getting that realignment into your discount zone, which would realign with an area of support on the monthly and on the daily. That once that leg trades into the higher time frame areas that you're looking at, Wiz, that could definitely be the position where we start to see a better opportunity to get long, because like you said, we are obviously structurally bullish on the higher time frames. The lower time frames are showing a little bit of a different picture, but that is because, of course, where the market's fractal, that is it, right? Like the 4 hour, if you go down to the 4 hour, which you are, I was looking at my screen when I was talking. We had that trade above 118.07s, which is of course the exact high. And then since that 118.07, all we've seen is lower highs and lower lows. So the demand has continued to fail. So there's definitely been opportunities to get short the euro, because from December 24th, the dollar was long. So there was that shifting in, safe haven. Let's get back into a safe haven. And what we're seeing is that kind of hedge trade at the moment, which is people are buying stocks, but they're also buying gold and they're also buying dollars. So that's why we're seeing the softening in euro and the other risk assets. But it's the right play. The right play is obviously looking for long in risk, so long euro, long sterling on a higher time frame. So I'm in full agreement with what you're saying, Wiz. I just like the idea of, from an intraday perspective, on the 4 hour, we can see there's ample opportunity to get short. On the M15, of course, you would have been able to intraday an intra-position trade from the 117 level. Like that 117 level gave us opportunities to get short. And obviously when we saw the rejection from 118 and everything. So what was it? 118. So December 23rd, we obviously had that rejection of that 118.07 level. And from there, of course, once the 15-minute confirmed bearish, there are a lot of shorts. And again, that's based on the fact that the daily and the monthly needs to rebalance to a period of stability in a discount zone. So did anyone get short euro dollar running into from 118s down to 117s, 116s at all, just to try and get a short-term trade on the books? Yeah, if you're not trading shorts and you're looking at the higher time frame realignment, if you're not trying to get short based on higher time frame realignment, just sit on your hands, because it's bullish every time frame. The weekly's the only one that's got that potential lower high printed. And what was the other one? Dollar CAD. Wiz, do you want to pull dollar CAD up?
No. I would leave that to you.
Oh, thank you very much, Wiz. All right, cool. Give me a second. So just while I quickly get that back up, in terms of FX, I know I've touched upon it loosely. One of my comments was that euro dollar remains under pressure, struggles to hold the 117 level as yield divergence between US and Europe widens. So we definitely obviously will continue to see a yield play and an interest rate differential come in. Wiz, there's a question for you in the chat.
Oh, okay. I've seen the question. My top 3 instruments are Euro USD and Germany 40. I think that's DAX, and ETH USD. That's the cryptocurrency Ethereum. Those are my 3 top instruments.
Nice. How many firms are you funded with, Wiz?
At the moment, just one.
Oh, nice.
Well, I do have a couple of challenges in phase 2 and over 5% in phase 1.
How do you tend to trade challenges versus evaluations? Do you risk less? Do you risk more on challenge 1? And then do you de-risk on challenge 2, which is obviously the evaluation? How do you tend to trade through those phases, and roughly how long do they typically take you from a mindset to passing perspective?
From a mindset perspective, I usually set a goal. I give myself a period of time to pass each stage. But from a risk aspect, I trade 0.5% up until I am 2% up. Then I risk 1%. So should I go back to my starting balance, I reduce my risk back to 0.5%. Because using Seacrest as an example, the total drawdown is 8%. So 0.5% risk per trade gives me 16 trades, which means I have to lose 16 trades in a row for me to lose my account. So when I risk 0.5% and I'm up 2%, I up my risk to 1%. That is the rule I follow for both phase 1 and phase 2.
Nice. Sensible. All right, so dollar CAD. Obviously, we keep seeing the weakening of dollar CAD, or keep seeing the weakness of dollar in particular. Obviously, we're still seeing it across the board. I know that we've seen some recent strength in the dollar, but overall, the CAD seems to obviously be fairly strong in comparison in the last couple of months at least. I don't tend to trade dollar CAD, but if I'm looking at anything right now, it would be, okay, yeah, we've respected this extreme here. Well, actually, it's into this bit here, so it'd be more like this range, but we'll just cover this. So we've come into the respect of this support area, so we'll just mark it as a range. So there's a couple of scenarios. We're ranging at the moment on this time frame. So realistically, we're going to either do one or two things. We're going to pull back into this, and then from there, we'll be looking at either the following. So do we respect this and then look for further shorts, which we could obviously look for shorts? Alternatively, is that going to be used as a flip to actually continue trading long to try and take out this high, especially if we start to see dollar strength? But I don't believe we're going to I don't think we're going to see much dollar strength in 2026. I think we'll see transitions and rotations out of the dollar into stocks, into riskier assets like BTC. So I think if after non-farm payrolls, ISM manufacturing data, etc., and we move out into next week, if this is really going to be an all or everything rally, then I think the dollar will soften or continue to soften, because everyone's going to be wanting to move their capital out of safe haven assets like the yen, like the dollar. and move it into Bitcoin and stocks. There still might be that idea of the play that they're going to be hedging something in gold, because as you can see, gold's done really well. Gold, of course, traded up at what, 44, yeah, 4,400 a troy ounce. So there's definitely still bullish momentum in gold. So I think we're still going to see that conservative rally. It won't be too much of a rip your face off rally, but indexes rally, stocks rally, risk currencies rally like sterling, euro, Aussie, CAD, whilst yen, dollar soften, especially when there's interest rate cuts coming. You know, the Bank of England have already mentioned further interest rate cuts. The euro have done so too. Yes, the dollar have. Yes, the US Fed have mentioned obviously that they'll start cutting interest rates or continue cutting interest rates as well. But I think if we're moving out to an all-risk rally, next week will be the sign. I think we've had some good 2 days. Bitcoin. Can we share analysis on ETH? Yeah, Wiz, seeing as ETH's one of your top pairs, feel free to reshare screen and share analysis on ETH. I don't trade ETH. I just invest in ETH. I hold it only. So yeah, Wiz, do you want to share your screen? We've got absolutely 9 minutes left. And then we'll cover gold. We'll cover ETH and then we'll cover gold. And that will round us out.
Okay. Let me know if you can see my screen.
Yep.
Okay. What I'm seeing presently on the chart is we have a major break to the upside right here. We've broken bullish to the upside, and our most recent weekly break of structure, which ended last week, also turned bullish on the line charts. We have another break right here. I like using the line charts a lot when analyzing the weekly time frame, because market structure is printed on the line charts, but the candlestick and the wicks just do the manipulations. So since we have a break on the weekly time frame, I would be looking for longs up until this level right here at 3411.96, and it's going to confirm my long position when this breaks with a candle body closing above it. If I can get a candle body closing above this level, then the next target is going to be this level right here at 4951. That's what I can see on the weekly. And on the daily, I would love to get a reaction from this level, because I tend to use a previous day's low as liquidity, and then I look for lower time frame confirmation as well. So I would like to see this day's low, that's Tuesday's low, being swept. Then we get a lower time frame reaction from here. Then I can long up to this level. I don't have the mental capacity to hold trades for more than a week. So this is going to be my first target, and I'll close everything out should I get the confirmation I'm looking for. And after then, when this bullish break is confirmed, then I can say we are longing all the way to 4900. So that's what I have for Ethereum USD.
Nice breakdown. Does that cover your question there? If I have multiple challenge accounts, do you advise same trades to pass it all at once, or you trade individually? Quadriana. So this is a subjective question. It depends on you, your edge. There's a lot of people that do many different things. There's some people that trade a pool of challenges in segments. So they'll have, I don't know, let's say they've got 10 challenges. They'll trade 5 challenges all together, and some of them will trade 5 challenges one by one. So they will basically scale them differently. They'll trade a particular account a particular day. Maybe they'll trade these accounts on a Monday, these accounts on a Tuesday, these accounts on a Wednesday, that instrument on this day, that instrument on that day. Alternatively, if you have a trade copier and your prop firm allows you to use a trade copier, and again, you have to check their rules. If a trade firm, sorry, if you've got multiple accounts, use a trade copier if you want to do it this way and trade them all at the same time. Now, again, it all depends on your edge. It's up to you how you want to do it. No one can really give you the right advice. They can only ever give you the way they would do it. And there is no wrong or right answer in anyone's response. But you need to think about you as a person. How do you react? How would it be for you if you lost all of those accounts, right? If you lost and blew up every single one of those accounts, how would you feel? Would you feel better maybe only losing a couple? Are you confident enough in your edge that you can execute utilizing a trade copier that's stable, that executes under 35 milliseconds or under 50 milliseconds across all accounts? Because that's key. You know, where are their servers based? Are their servers based really close to the execution server of your broker or for the prop firm? Bearing in mind, if you've got 10 different prop firms, not all of their servers or liquidity providers are going to be in the same area, in the same regions. So it's going to be very difficult to run VPSs to increase your execution speed, or should I say decrease the latency between execution and ping of the server. So there's no right or wrong answer. I typically trade all of my accounts at the same time. I don't tend to differentiate unless we're talking different instruments within derivatives. So we're talking CFD or futures. I'll trade them separately because, of course, they're completely separate in their own rights. If they're all CFDs, it will all be CFD executions all at once because that's my edge. There's no different exposure. But, of course, some people look at it differently. So entirely up to you. Wiz, did you say you trade gold?
No. I don't trade gold. I don't know why I'm scared of gold. Probably because it moves too fast.
It's the most over leveraged instrument in the industry. So, to be fair, it's the most traded instrument as well. At Seacrest, everyone trades gold. You know, the majority of our book trades gold. Don't get me wrong. It's just because it's the most popular, it doesn't mean it's got the most volume running through it. However, it's definitely the most active instrument within our book. There are, of course, a lot of traders across FX majors and indices. So, yeah, it's a crazy asset. Let me just stop sharing your screen and I'll reshare mine. So everyone's asked for gold. I mean, gold's in a position at the moment of correction. So it's bullish overall. We all know that. We can't argue with that. We've obviously had that last high to get taken out. We traded up at 4,500, peaked at about 4,600, and we're trading indecision at the moment. So we're ranging. You know, we've had a failure to break to the downside, a failure to break to the upside. So we have to either, again, like I touched upon earlier with another instrument, we either have to look at the extremes and trade the extremes inside the range, or wait for a break on either side of the market to actually give us some direction. But for right now, if you're in longs, longer term, you've obviously absolutely killed it. You know, you've smashed it. It's a very good asset long term to hold. Alternatively, if you're not in a position from a higher time frame perspective, I wouldn't be looking to get long anything at the moment or short anything at the moment. That's pretty much it from me on that perspective. I can go down intraday time frame and cover the intricate moves of intraday positioning if you really want. Good discount. Yeah, great discount. It's literally only available for today. First 10 people, 35% discount, Warner 35. 10 people only, expires today. One use per person. So there's no real structure in this bearish leg. So I wouldn't want to be getting short. You know, you're shorting the overall time frame against the higher time frame trend. There's no way I'd like to get long from here either, other than just pure discount play, overall higher time frame momentum. You could try to look for longs on a lower time frame. On the 4 hour, there's no long. We respected that high. We respected the low. We then failed, so that it's bullish unconfirmed on a 4 hour from that particular leg. It's overall bullish. We know that, right? So if anything, I'd be looking for a rebalance back into this, see if the support holds again. Where is it? At the extreme of demand. I'd then look to get long if I got that confirmation. But for now, sitting on hands. 15-minute may show a different picture. Again, we can wrap that up in a moment. This is pretty much coming into the close of the session anyway. So 15 minutes coming into the extreme of the demand we were discussing earlier. And I wouldn't be looking to get long until this fails. Once this fails, I'd want to see price come back into the extreme, which we've got. From there, I'd consider getting long. So what caused the move? I'd get long, and I'd probably get long off of this break here. So I'd get long in somewhere in and around here. I'd get long. I don't like the gap too much, but it's either get long here or wait for the gap to be filled, then get long again, which we'll obviously get later on. So if I'd got long there, you'd seen there's a couple of R available there. Alternatively, if we were looking for this gap to be filled inclusive, then of course we'd want to see price come back in. Same scenario. We can either have an anchored VWAP from the high, or we can have an anchored VWAP from the last structural high that caused the low to fail, which would be here. And then once that level goes, we could get long. So we'd be long from somewhere in here. Oh, why didn't that work? We'd be long from here. So we missed that first part of the move. And listen, as a trader, I'm not bothered about necessarily the first quarter of the move or the last quarter of the move. As long as I get that main section in the middle, I'm quite comfortable. But overall, stops would be below, realistically, either this structural point or below the extreme. Entirely up to you on your risk management. Quite comfortable to put it under there because we know it's supported. We'd first of all be looking for a target structure high of this. So there's about 2.5 R available on that. And then if you're just running a trailer, if you were running a trailer underneath the move, then I don't even know where you'd want to get out. You know, if you're looking for a manual exit, there's over 5 R available. If you're looking at maybe trailing it below the general VWAP, then you would have got stopped out at about here. So you would have been stopped out at around 2.5 R. But opportunity cost and opportunity risk was there. What do you think of a trader who is a setup-based trader, not a I trade this is, and that, who trades any asset but just has to find an edge base of confluence? Do you think they can be consistently profitable? So when you say you're a setup trader, you are a systematic trader that utilizes some form of hybrid analysis, be it technicals and macro, but you're not fixated on any instrument. Now, if you're a swing trader, depending on your execution, depending on your approach. So, for example, if I was to apply this to how I position trade stocks, which obviously is 3 month, 6 month, and longer term holds, then my methodology is applicable across any instrument, any equity, whether it be the US equities, UK equities, European equities, Asian equities, etc., etc., etc. But when it comes to day trading, whilst it's okay to have an expansive list of instruments that you focus on, the preference and more guidance would be focus on a select few instruments that have good liquidity, good volatility, good volume. Because you don't want to see a setup in euro sterling, because like euro sterling is probably the worst instrument to trade, right? It pretty much just crap. It's just a rubbish instrument to trade. So if you're looking at euro sterling and you see the setup that you've seen in, I don't know, the Dow or the euro dollar, you may be holding euro sterling a lot longer than you'd be holding the Dow or the euro dollar. So you also have to factor in opportunity time cost, because, you know, sometimes you'll get in a trade and it doesn't move quick enough. Whereas had you have done the same thing in maybe dollar CAD, you would have been in and out a couple of times and you would have seen a couple of R available to you. So if it was me, I'd keep instruments to maybe 10 or less when you're first starting. It is bad, Saucy. It's rubbish. Absolutely rubbish. It's just a dead pair. You just, yeah, I don't want to get into it. My opinion only, Saucy. It doesn't mean we can't be friends. You can still trade it and you can prove me wrong. So I'd keep it to a select few, you know. Look at the DXY, trade euro dollar. Bearing in mind FX is mean reverting. So if you're looking at something that's more trending, got better momentum, you may want to look at an indice. So you may want to look at the DAX for the European session. For the US session, you may want to trade the S&P 500 or the ES, which is the same, just different wordings against futures, but CFDs. You want to trade maybe US 30. So there's an opportunity to look at different instruments across different sessions and utilize the same model. Yeah, of course you can, Saucy. And that's my point. I can be wrong, you can be right, or vice versa. And that's the beauty about trading. From an instrument perspective, yeah, just coming back to your comment there, Aaron, I would say don't have too much of an expansive list, because you're going to get lost. You're going to have opportunity risk. You're going to be kept in positions that aren't moving. So you're going to lose opportunities. You want to be realistically trading stuff that's got high volume, high volatility, decent momentum on a day-to-day basis. It doesn't necessarily mean that there's going to be a trade or a setup every single day. But from a systematic perspective, as long as you've back tested it, as long as it's got good characteristics, and as long as it works for your system, keep trading it. Oh, USD crosses. Yeah, majors. So USD crosses, realistically, are what you want to be looking at on the majors. So euro dollar, Aussie dollar, cable, dollar CAD. You could even look out on dollar yen. Maybe then obviously look at other FX crosses, which are obviously sterling yen, euro yen. But that pretty much wraps it up for today's live session. Does anyone have any more questions before I wrap up? Wiz, any final words to say before we leave?
I just want to thank everyone that made it to this live stream. We couldn't have done it without you. And one more time, I would say we should join Seacrest Markets, because we have the best trading conditions in the market, and we have a very, very good promo running right now, which we can all take advantage of.
Yeah. As a reminder, obviously, Wiz is also an affiliate of Seacrest Markets. Please use Wiz's link if you are looking to obviously get a challenge, as it would be great to support Wiz for coming on to today's channel. Listen, thank you everybody for turning up. We really appreciate you all. We know these live sessions are new to Seacrest. We will be doing them Monday to Friday, 8 a.m. UK GMT. We will, of course, be looking at expanding them out into the US session. So maybe trading the US markets live, because that's where pretty much I'm most active from a trading perspective. So please continue to tune in as well. Subscribe to the channel. Please like and comment on this video and turn notifications on. And like I said, if you're looking to purchase a challenge through Seacrest, feel free to use Wiz's link as an affiliate. Alternatively, as I mentioned, the first 10 people can get 35% off today only with the code Warner35. And again, it expires today. Alternatively, please use Wiz's link, because that is fully active all of the time. But other than that, thanks everybody. Thank you for the support, and see you again this time tomorrow. And again, thanks Wiz. Thanks Wiz for coming on. Really appreciate it. It's been
Thank you for the opportunity.
Some interaction.
Thank you so much. Thank you. Thank you very much.
Have a great day. Trade safe. Trade well.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed